Hey, Job here. On this channel, I invest 100% of my income to create cash flow that will replace my salary. I also live out of my Robinhood brokerage account by paying bills with margin. I've been doing this for over a year now, since the end of May 2025, and today we'll be going over the month 13 portfolio update since I started this strategy that should hopefully bring me to an earlier retirement at 40 years old. It's a very aggressive strategy for sure, and there is some risk to it, but as you'll see in today's update, it's yielding some very promising results so far. I'll go into all the details of my performance this month, breaking down how I just squeaked in a slight underperformance against the S&P 500 with my 1.5% total return loss. I'll check in with my margin health as usual, all my dividends received, go over how my top line numbers have progressed month over month and since I started, and just do a quick update of my rough projections and goals and where they're sitting after the month's performance. And I'll finish by going over my expenses and cash flow for this past month in Monarch and also on my spreadsheet. I'm changing up the monthly update this month to keep it into its own video, just so I don't have to kind of rush between the monthly and weekly performance numbers like I've been doing for the last several months, really. Timing wise, it just kind of worked out better that way, given that the end of the month happened at the middle of the week. But yeah, let me know what you think of that new format in the comments. The normal weekly update will come out tomorrow. And also, by the way, happy 4th of July. And also happy belated Canada Day to any Canadians that watch, given that we are the 4th today that this is releasing. But all that said, as usual, you'll get radical transparency on this channel, whether the market is up or down. You'll see all my real numbers. If you appreciate all that transparency, give a like and subscribe. Just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you have a good read of this disclaimer. As far as my weekly flow chart, you can kind of see it here. Pause if you'd like. If you want a big deep dive on this, check out the video at the top right. And let's just get started. So if we pop over to Robinhood, you can kind of see where the portfolio ended at the end of this week, but we're mostly going to focus on the month, right? And given that we're a couple days into it, I can't really rely on this 1 month thing. So we're just going to switch to Snowball here. So if we go to Snowball, you can kind of see my portfolio here. So if we switch to the growth tab, let's just take a look at how we did, right? So let's update that here. We're going to isolate everything to basically the month, right? And then here as well. It's kind of unintuitive here. Like even though it's the first, it says this is what it is from the first here, even though I put the second. But this is basically from June 1st to June 30th, right? And well, a little correction on what I said earlier. So actually down 2.26% versus the S&P. So the S&P in the same time period was down 1.76%. So we can kind of see that here, right? So it just got beat out there. So slight underperformance this month. And you kind of saw with the last few portfolio updates, right? There's been a lot more red this month with just the volatility in the market. You can kind of really see the risks with margin here at play, right? You can kind of really see that on the down days, I got hit a lot harder because of my margin. But on the up days, got some decent upswings, but didn't have enough consecutive ones to really kind of beat it out, right? Like on those down days, I was going to hit harder. So as a reminder, like my leverage multiple right now is sitting at like 1.84. So that's like how much more volatility gets added to any swings up or down, right? So like if something is 1% on the day, like I'll be hit by 1.84%, whether negative or positive. So we can kind of see there. So that's how we're looking on the month. And then if we do here as well too, to just make sure it's June. Yeah, a bit annoying that this isn't clear, but yeah, this is on the month here. So mostly red, as you can kind of see. It's crazy. Just the day difference makes for a big swing, because there was a big swing in the semis this week, right? You can kind of see there. But you can kind of see the big difference there as far as like how the performance was affected, right? So we can kind of really see that like semis picked up a little bit, but they got hit hard this month. But yeah, S&P got hit hard. VU here down 1%, right? QQQ down 1.6% as well. And how we can kind of see here that like TSPY actually went down less than the S&P, which is cool to see as its reference index. TDAQ actually went down a lot more than QQQM, which is interesting. And ULTY just got hit a lot harder. Copper got hit hard this month. KGLD as well. Just with kind of like the P stuff falling apart, I think that really affected it. And also just the potential interest rate hikes coming later this year that the Fed hinted at. And then Bitcoin just got hit hard this month, down 18%. Same for blocks, but the semis helped buoy it a little bit here. BCAT holding up nicely as far as kind of its mix of multi-assets here. ILT down a little bit and pretty much matched the S&P. DRAM up a bit. Google up nicely as well. And CLSE holding tight around the 0% mark. And XPAY fell a little bit more than VU. So yeah, just interesting to see all the dynamics at play, right, over the month. So oil, just with the conflict popping off again, that kind of held steady and grew a little bit, right? And just with the positivity from the peace plans and not, but it seems like it's held up okay. So yeah, just cool to see. Year to date, you kind of see we're still mostly green on this across the board, right? Just kind of seeing a chippy, crazy outperformance, all that stuff. But we'll really dive into this more in the weekly tomorrow. But overall, this is just the month. On the 3 months, still doing well, very into green, up 33.59%, and the S&P's up 14% in the same time period. I'm up 21.5% versus the S&P's 9.92 in six months. Year to date, still beating it by over double, so up 41K or 22%, and the S&P's up 10% or 18K. So doing well overall, despite the month's underperformance this month. June was just a little bit tougher in that regard. But honestly, I welcome that little downturn, little correction, just because I like buying on those red days, honestly. It's just healthy, given just how much we've gone up, right? Like it's just been a lot this year. So really in the grand scheme of things, like we've gone down a little bit, right? Like we kind of traded sideways, if anything, just with the slight down. But we've just been up so much in the last several weeks. So we were due for some breathing room there, right? That's how it's looking as far as like the growth numbers there. If we check in on the dividends, we can kind of check in on the dividend calendar here and go back to June. So solid month overall. Ended up getting 5.8K in dividends, which is amazing. Dividends wise, we've been kind of slowly ticking up. I think like this as a reflection, yes, the market's been going up, but also as a reflection of like just the rebalancing that I did and kind of really refocusing on the core income drivers that are in the 10 to 20% yield, right? So like in this category, I'm really been focusing on the anchors here and a lot in the hedges. A little bit in the ultra yielder as far as GIAX and blocks, but not really touching YMAX or ULTY anymore. Chippy, just waiting for a little bit more of a pullback before I keep adding to that, since I'm pretty heavy into it already. But it's been a steady climb in dividends, which has been nice to see. You can kind of really see just like month over month how that's been growing, right? You can kind of really see since I did the big rebalance in February, right? So that's been good. You can kind of really see that throughout every week has been a solid week, practically almost hitting like 1K in dividends almost every week here. So yeah, Chippy, ULTY, YMAX, blocks, and GIX are kind of the weeklies, kind of really booing things every week, but then a lot of the monthlies kind of supplementing them. So we'll go through every week, but you can kind of see here what I made on the first week. So just a little under 1K, a little over 1.6K on second week here, a little over 1.5K on the third week, and then a little over a K on the before last week, and a little over 500 on the last 2 days of the month. Pretty nice overall. Good month. It's the highest we've had this year so far, which is awesome. So we'll see. There's some more highs to make on dividends in the back half of the year. So we'll see how that goes. If we dive into the dividends, we can kind of really see on yield on cost, right? And I think this illustrates perfectly why I'm investing really in all the middle positions here, right? A lot heavier, just because even as we're kind of turning down, these aren't eroding as much, right? They're keeping their yield, they're keeping their NAV a lot better. XPAY, BCAT, KGLD, TDAQ, KCOP, MLPI, TSPY, Goop. These are all holding nicely. What's really eroded is ULTY, YMAX, BTCI, blocks. Chippy is actually getting even higher in dividend, given that it's still keeping in the 40 to 45% range, even as it's appreciated. But like I've said, for ULTY and YMAX, I'm just not investing in them as much this year since I went so heavy in them last year. And I'm okay with kind of taking the hit on the yield on cost here and on the NAV, because I'm reinvesting 50% of their dividends and just kind of happy to collect that income. And at the end of the day, like if I look at the portfolio, right, YMAX and ULTY are 6.5% of my portfolio. So relatively small, right? So even if like something crazy happens and these go to zero, it's not going to be a major hit to the portfolio in the grand scheme of things. But yeah, I'll just keep collecting their income and reinvesting it into other stuff here. But that's how the dividends are looking. If we check month over month, year over year, you can kind of really see that, like, yeah, just from the year of kind of investing heavily in the portfolio, right? Like every month we basically beat out the last year's month, right? I think next month we're going to beat it out. I think August will have a bit of a harder time here, 5.7K. If we check against that, right, we're kind of estimating 5.2K. So I think that's the only one, because I think it was like a 5-week month last year. But I think like for the rest of the year, we might be able to kind of make a good run at potentially beating out some of these, which will be cool to see. So excited to see how that progresses for the back half of the month. If we check in on the portfolio spreadsheet, I'm really going to go over the gross numbers and things like that, just because, yeah, this is as of Friday, right? So this includes a little bit of July. But I've kind of captured the snapshot at the end of day on the 30th over here, so we can kind of really see. So if we really check month over month, right? So we can kind of really see that. So this is the top values, right? So I've been basically tracking the numbers at the end of every month. And since I started at the end of May last year, just to kind of really see the progression of stuff. So we can really see that month over month, my gross portfolio value has grown, right? And that's the key thing with this whole strategy is that like, I'm never touching my gross portfolio value, right? I'm not selling any positions to take money out. I keep growing the gross portfolio value, keeps compounding on the growth side, on the high yield side. What takes a hit though is the net value, right? Because I'm taking out margin every month to pay for all my expenses. So you can kind of really see that luckily it grew here still, despite the margin that got taken out. So we can kind of see here that it grew 4K roughly, and then we grew 12K here in the gross value. So we can kind of see those in the charts here. Not as big as that jump that we had with like the from March to May here, but still steadily growing. We can kind of see here that my cash available withdrawal still just went down a little bit this month. So in part because I am reinvesting 50% of my dividends from my weekly payers, so Chippy, ULTY, YMAX, GIAX, and blocks. But also it was a heavier month as far as expenses, right? So we can kind of see that I ended up paying 1.1K more than my normal expenses of 9K. And we'll get into why later. But that kind of hits the cash available for withdrawal, right? Because that's coming out of there. And then as a result, the margin buying power went down a little bit here, just under 1K. The margin buffer grew, which is cool to see. So that this has just been steadily growing, which is nice to see, right? As I've been investing in the gross balance, the margin ticked up here. So now, given that I'm investing half of my weekly dividends, that actually gets added to margin as extra, right? So I'm accruing a lot more margin that way. So normally, if I actually hit my 9K spend per month, only technically like roughly 4K of margin will be added after dividends, right? Because like if I do like 9,000 of spending, but then 5,000 of dividends comes in, there's only 4,000 that gets added to margin, right? But given that I am adding some extra dividends reinvestment, that gets added, right? So right now I'm on average adding like $1,700 from that dividend reinvestment, plus ended up taking out a little bit more for the monthly expenses. So this went up a little bit higher here. So 8K over month for the margin, and then dividend received, just a nice improvement here, right? So you can kind of really see the charts, how that reflects over time. So gross value growing steadily and nicely, net value as well. Margin kind of just steadily growing. That balance eventually, we'll get into the projections after this, but eventually once I reach my monthly dividends exceeding my monthly expenses, then the margin balance should start coming down a little bit. And kind of see how the margin equity, how that's going against the margin buffer and the full percentage and the net percentage. So it's just slightly ticking up. It's been a little bit sideways in the last month. And then margin buffer here just kind of growing nicely. You can kind of see with like the equity jump here, this grew nicely. Margin buying power just kind of growing as well. And monthly dividends, we kind of finally stemmed the bleeding here. We're not trending down anymore as we were last month. We've kind of evened out. And then hopefully we can kind of keep that line growing, the trend line, right? I really see how stuff has progressed. It's crazy to see from when we started May last year, right, at 205K, and now we're at 423.8K. Net value, we were at 117.8K, now we're at 234.5K. Equity has actually stayed stable, which is cool to see. This is what we want, right? Don't want this to dip under 50%. Available for withdrawal has grown from 31K to 41K. Margin buying power growing as well. And then a big difference in this is when I switched to Robinhood, right? This all kind of got a lot higher because of just the more favorable margin interest rates on Robinhood and the more favorable margin maintenance rates. So that's been nice to kind of see, right? The margin buffer just being a lot higher than what it was on Fidelity. But that's the top line numbers. And as far as goals update and kind of like the rough projection to see where we're going to be. So this is the sheet that we normally see. I actually moved these so we can actually always kind of keep this in mind. But I actually updated it. So this is the old one. And then there is this new one here that I updated. So the key thing that I added here is the extra monthly dividend reinvestment. This wasn't factored in this old one because that's fairly new. Just started doing it when I started my new job, basically, just because I felt that, as you saw in the last few monthly updates, I've been kind of falling behind, right? Like, things are not going as fast as I'm hoping as far as like kind of building up the monthly income. It's already going a lot faster than normal, but I'm crazy and I want to fast track it a little bit more. But that's why, one, I'm not doing 100% of the dividends just because I think that would stack the margin a little bit too much. But now I can model that out a little bit better. But what I'm doing is 50%. So that makes for an extra $1,700 that I invest every month. And then I basically kind of get a blended yield of like roughly 15% from that, right? So I want to factor that in to kind of compare where things would be. So you can kind of see it here. So like if we go to like 40 years old, for example, and just kind of compare apples to apples, right? We can kind of see that like that extra is helping a bit. It's added like roughly 1,000 extra a month in monthly dividends here. It definitely gives a hit to the equity here. That's going down a little bit more because I'm taking in more margin. So you can kind of see here that like potentially be at like 66K more margin here. But you can kind of see the extra juice that it adds to the net equity and then also the gross balance, right? And interestingly enough, you can kind of see like the net equity because of like the extra monthly dividends that it's giving, it kind of actually boosted a little bit higher compared to what I would have been at my without the dividend reinvestment. So I have to actually model out just like 100% investment and see how that is. And you can kind of see like cash available for withdrawal as well too. So this is down a little bit comparatively, right? Because when I invest that eats up like half that cash for that 1,700, right? Interesting to compare overall, right? So if we go with this updated projections here, and if we update the goals here, so different goals that I have here, the extra net paycheck covered, monthly expenses covered, net monthly salary after taxes, right? My gross salary, margin paid off $0, obviously. And then ideally, like if I want to be close to 2x my gross monthly salary, if I were to retire on this strategy, right? So let's just get this updated. So extra net paycheck covered. So as of this month, I'm actually covered, which is awesome because I'm kind of averaging 5.5K every month now. And my net extra paycheck roughly per month is 5.3K. So that's one goal achieved, which is awesome. And then if we check monthly expenses covered, this actually moves up as well too. So this moves up roughly to November 2028 here. So in a couple of years, as far as my net monthly salary fully covered, this moves up a little bit as well. So 9.7K. So this moves it up to March 2029 potentially. So before my 40-year-old target, right? As far as my gross monthly paycheck covered, this moves up a little bit as well. So closer to March 2032. So here I'm like still overshooting by 2 years, right? Even with like the monthly dividends reinvested. So I'll have to kind of keep running projections if it's worth basically doing 100% dividends again. I'll just kind of run the numbers again with this updated projection and see if maybe that is worth it. Just because there is more margin that's going to get added, but we can kind of see that the net value is still kind of growing along with it, which is interesting to see. I'll have to run those numbers again just to see, but we'll have to take a peek at that because I just want to see if I can kind of help move this up even earlier, right? Still targeting that 40 years old thing. Like if I don't quite hit it exactly then, that's fine. But I want to see what I can do to kind of help tweak things, right? And that's why it's nice of kind of doing these rough projections just to kind of get a rough ballpark idea of where you'll land, right? I personally, I don't like kind of going blind into stuff. I want to see where I'm going, right? But really, also a key thing that I want to mention too is that like, because this gets asked as well too, is that people ask, when do I start paying down the margin, right? And that generally happens once my monthly dividends exceed my monthly expenses, right? So you can kind of see that here. My monthly expenses generally are about $9,000 a month, right? So once the dividends roughly hit that point around this mark here, right? In like 2028 potentially, that's when you kind of see that the margin balance keeps growing, but eventually it starts ticking down, right? Because once I'll keep investing into high yield, so this number will keep growing. But once that exceeds it, that any extra that doesn't kind of go to my expenses will basically kind of go to pay down the margin. So you see that past a certain point, it'll actually start going down. So it's actually, this is looking past when I'm 40, but like, yeah, it starts going down. But the thing is here is that like maybe once I reach 70% or 80%, I might actually just kind of pull off the gas there and maybe just try to keep the margin at that level, right? Just because I'm getting more comfortable with it. And once I reach that equity percentage, I think like that's relatively light leverage, anywhere from 20 to 30% in the grand scheme of things. So we might just keep that on, and any extra might maybe start going to growth to really kind of help boost my equity in that sense, right? Or potentially just even more into high yield to help boost things there. So we're just going to keep an eye on things and see how that goes. Might still play with some numbers to see what I might tweak. But as it stands, Once I reach 40, I might be at just under 1.1 million potentially. Net equity, I'd be sitting at 729.8K. I'd have 366K of margin at this point, so it would be at 66% equity. My average monthly dividends at that point would be about 11.9K, and I'd have like about 170.9K of cash bill for withdrawal. So pretty awesome. And this is one too, I could potentially be more aggressive with this too and just really invest that more too to kind of get that income. But like hypothetically, say things go bad at my job and I get laid off, right? Like say July next year, in a year from now, I'd roughly be at 7.1K in monthly dividends. So not quite my full paycheck covered, but in a better position than I was at when I first got laid off back in February this year, right? I was at like 5K on average, maybe a bit less. So it would be in a better position. And again, there too, like there are some drastic measures I could take, right? Like I still have over half my portfolio in growth. So that's like 204K that's in growth still. And potentially I could like liquidate that and just kind of go full income if I'm feeling confident enough in that. And so like say if I took like 200K and then put that into like a blend of like TSPY and TDAQ, let's say. So that's like, let's say a 15% yield, right? So that would give me 30K annually, divide that by, and that's 2.5K extra. So if I added that to the 17.15, that would be almost my full paycheck covered. So not quite there yet. That's why I still like kind of keeping growth to kind of stem off NAV erosion and things like that and keep it appreciating. But that is potentially a valve to pull, right? Or rotate or whatever you do with a valve. But that's something to keep an eye on. But yeah, at 45, if we look at that, potentially I'd be at like 2.1 million or the gross portfolio value, 1.8 million on the net portfolio value, and only 214K of margin debt in that case. It's like, this is nothing in the grand scheme of things, right? As far as margin. So I kind of really see the difference too if we swap between the two projections here with like dividend reinvesting or not, right? So that's a couple 100,000 more, right? With the compounding that happens from those extra dividend reinvestments. That's for 45. If we check 40 again, yeah, just 1.1 million versus 1 million, right? So adds up. Just doing that extra $1,700 a month in dividend reinvestment. So that's the projections. So I'll look at the Monarch cash flow for the month. So overall, if we actually pop back to the spreadsheet, it was a positive month, right? So despite my expenses going a little bit higher, and yeah, that I explained last month was because of the Hawaii trip that we had, right? We just a lot of expenses came on that month and was an expensive month in that regard, and had a lot more medical expenses now that I'm on a high deductible HSA. So came in at 10.1K in expenses this month, but at the end of the day, given the income coming in and just my full paycheck being invested and whatnot, that's still a 6.4K net add to the portfolio after expenses. So pretty awesome. So throughout the whole year, even through my layoff, I still had positive cash flow in the portfolio even after expenses. So this is cool to see. So still positive 6.4K. And that's just from all the income, right? So 16.5K that got added to the portfolio in total. So pretty awesome. And if we check how that all breaks down in the cash flow wise, so these numbers will look a little bit different just because I have some retirement stuff in there and things like that. So there's a little bit extra that gets added. And when I make those payments too, all that is kind of offset, right? Like stuff that I paid for this month will kind of show up more into the next month. So overall, if we check, yeah, 17.5K of income that came in this month, which is awesome. So that's across my paycheck, dividends, business income, rental income, retirement income, my HSA contribution from work, cash back, and big month in income. You can kind of see here how that stacks against the rest of the months, right? So expenses wise came in a little bit higher than 9K this month as well. And there's a couple things that added to that, and we can actually kind of look at that. So let's just do 9.662. So high items as usual is the mortgage. And actually this is going to come down for next month. And we already see it here just because my escrow is off my mortgage now. So now I just pay my property taxes and my insurance on its own. And so that'll be the last time I paid a little under 3K for the mortgage, which is great. I love my restaurants, and me and my fiance, we go out to eat a lot. We do cook at home a lot as well too, but we do like going out to eat, and cheaper restaurants, sometimes more expensive ones. We have like 8 nights every 2 weeks where we tend to kind of go to a nicer restaurant together. We love trying new stuff like that. Clothing came in higher this month because I was buying stuff for our wedding that's coming up. And actually this should be minus 400 or so, just because I ended up getting a blazer and pants from Bonobos, but then a couple weeks later they went on sale. So did the thing of like buying it and then returning one that was more expensive and buying the cheaper one. So this should actually be closer to 900 after the refund that I got that hasn't hit yet for this month. But clothing for the wedding, because I bought my suit and all that. Medical, as I mentioned. And also for clothing wise, you'd see this in the Discord if you were in it. But one part of my eventual financial freedom is that I've been really focusing on fitness and kind of losing a lot of weight this year. And I've lost over 40 pounds, which is awesome. And so we have this little off-topic fitness channel where, we've just been going over all our numbers and training routines and stuff like that. So personally, I can kind of see my DEXA scans that I did last month. Just a lot of progress and weight loss and muscle gain. So it's just been nice to track that. So my portfolio is going up and my weight's going down, dual opposites. And in a way, I kind of see that as a little bit as like investing in myself for retirement, right? Just to kind of help reduce my medical bills down the line, trying to drop my weight back to a more healthy level in that sense, but help reduce this medical cost down the line, right? But yeah, as a result though, I've dropped multiple shirt sizes, pant sizes. So I've been actually buying a bunch of new clothes. So that's part of the cost as well, outside of the suit. But let's say we didn't have like those clothing costs that we normally do. So I don't know, let's just take off 1,000 just for like to factor in some of the newer clothes I had to buy. So my expenses would have been closer to 8.6K. Medical stuff, again, that's just like higher cost there, but that's gonna come up every now and then. But like, had I not added that, yeah, my expenses would be closer to 7.7K, right? But that's the big items there. Clothing, medical, that kind of added a lot more than normal. Household items, actually, that was a big one. I ended up replacing my RoboVac. Honestly, I've been hating my Roombas recently. So I finally got rid of it, just ended up donating it to Goodwill, and actually bought Roborock, and it's been kind of rocking. Honestly, I've been really enjoying it. It's a vac mop thing, and that's been doing a really good job. But that was like another $500 expense there in household items, right? Ordered that off Amazon. And groceries, $500 a month. Entertainment and recreation, so movies, going out to doing any activities, $260. Gas, $200 a month this month. It's quite a bit. Auto payment. That one, I forget what it was. Oh yeah, just car registration, right? So that's the coffee shops. I actually discovered a coffee shop recently that's like walking distance, and that's my regular coffee break now. And I actually go there a lot now, almost every day. That's kind of my nice coffee break walk in the middle of the afternoon during work. Just half an hour walk. And internet cable, $124. Subscriptions, gas and electric, that came in, that's monthly, $112. Subscriptions, there was a couple of annual ones that hit this month, so this was higher than normal. Pet insurance, that's $100 a month between the cat and the dog. Financial fees, ended up having, I believe, a credit card fee. Yeah, for my annual fee for one of my travel cards. Phone, $43 a month. Fitness, that was the DEXA scan. I've been doing them monthly to just kind of better track all my numbers and how those are doing. So that's $40. Parking and tolls. I hate having to fight for parking, so I just bite the bullet anytime I go to Seattle. I just pay for parking. Furniture and housewares, I forget what I even bought there. That's just a tiny thing. Gifts, just random gifts that we bought for friends. And travel airfare, so this one's a fun one. So $11. So we actually bought our tickets, or at least the flight over for our honeymoon next year. And this only cost us $11 and 45,000 miles from our Alaska card. So again, that's part of why I love getting those travel miles. I haven't paid for an international trip or a big trip in a while, airfare wise. So that's great. We're going to go to Korea next year. So very excited. And again, just still traveling, still enjoying life, even though I'm investing 100% of my paycheck, right? That's the monthly income. So overall, just a nice 7.9K in total savings this month and a 45% savings rate net when you calculate that. So, but what I'm really doing is 100% savings rate, right? Because I'm investing my full paycheck no matter what. So all the income that comes in, this gets invested. None of this gets wasted towards bills. All my margin goes towards paying these bills and paying for regular life, right? Again, we're just kind of keeping that compounding going, right? Like really just focusing on this gross portfolio balance and just kind of keep growing this and never selling to get rid of that. So that's how that all kind of links up together, right? And that's the month, really. So strong month overall, despite the little dip, right? You can kind of just see how stuff still grew despite all that. So this is what's really awesome about the strategy and how much I love it. So that's the month. And yeah, give a like and subscribe if you appreciate all that transparency. And if you want to support the channel, best way to do that is definitely check out the description for any video. You'll see all my links for the free and paid stuff. And again, if you want to join our Discord community where we're talking investing, fitness, gaming, TV, movies, and just a lot of like-minded investors that are living out of their brokerage in tons of different ways. You can be exposed to tons of different strategies. Everyone's been posting their portfolios here, which is awesome. So lots of people to learn from, not just me. Great little community that we have here that you can join for $3 a month through either YouTube or Patreon. So give that a look if you're interested. Peace, and I'll catch you in tomorrow's weekly portfolio update.